most people, the way they think the system works, it's not the way the system actually works. So the classic example is QE, or quantitative easing, where the central bank is buying Treasury securities, for example, and replacing them with a deposit. And so if you look at what most people think about quantitative easing, our readers have seen that chart, which shows the huge increase in excess reserves in the banking system since QE. And so naturally people think, well, as soon as those reserves leak out into the private sector, you're going to have massive inflation. So this started with me somewhere around early 2013, where I started to really just reevaluate everything that I thought about the banking system, how it worked. Because nothing that people were predicting would happen, happened. In fact, the opposite happened. Rates didn't go up, rates went down. Gold didn't go up, gold went down. And the hyperinflation everyone thought was nowhere near. If Treasury yields are still falling 2%. So I started to re-examine all those assumptions. And I think there are many things I've learned, but if I had to boil down the one thing that I would tell our listeners or readers to remember is that loans create deposits. Banks don't lend deposits. So on the macro view, when you're looking at the macro economy, just because there are a tremendous amount of excess reserves in the banking system doesn't mean that those are going to leak out into the private sector. In fact, whether the excess reserves are there or not, it does not change the banking system's ability to make a new loan. It has no impact. So whether they had $3 trillion in excess reserves or they had zero in excess reserves, it doesn't impact the banking system's ability to create new money and make new loans. And once you understand that, then you start to think, this is why we're not seeing that kind of hyperinflation that people might have expected with quantitative easing, because it's trapped up there in the banking system and there isn't a mechanism for it to get out. It's not possible.